All right, let's get into it. Forget everything you thought you knew about the Fed because the next guy in charge could change everything. President Trump absolutely wants current Fed boss Jerome Powell gone. He thinks Powell's keeping interest rates way too high, costing us all a fortune. And every time Trump drops a comment on social media, markets go wild. People are even whispering about a shadow Fed boss already pulling strings behind the scenes. But who's really in line for the top job? We're talking about the 3 or 4 people Trump has said he's considering. And trust me, you're going to want to know what they mean for your money, because we're going to tell you exactly how they'd move the market. And I'll tell you who's secretly driving the bus right now, even before Trump makes a move. You don't want to miss that. Stay tuned until the end. So who are these contenders? Well, thanks to betting markets, yep, you can bet on this stuff now, we have a pretty clear picture. But here's the kicker. Powell's term doesn't officially end until May 2026, yet Trump says he'll name someone soon. That's nearly a year ahead of time. That's not normal, but who cares? Markets look ahead, so traders are already pricing in what the new person would do. This makes Powell basically a lame duck, meaning his power slowly fades as his departure gets closer. The betting markets are pointing to 4 main individuals right now. You need to know these names. Chris Waller, a current Fed official, Scott Bessant, the guy running the U.S. Treasury, Kevin Worsh, a former Fed official, Kevin Hasset, a White House economic advisor. The odds on these guys jump around every time Trump tweets, but this gives us a solid lineup. Let's break down what each one means for you. The current Fed insider versus the inflation fighter. First up, Christopher Waller. Many experts say he's the frontrunner. He's already a Fed official, so he's shaping policy right now. And here's what you need to know. Waller thinks the Fed should look past any temporary price jumps, like those caused by tariffs, and still cut interest rates later this year. When he said that recently, the interest rate on 2-year government bonds dropped a crazy 0.2 percentage points within minutes. That instant reaction is why some people are calling him Trump's shadow Fed boss. He's basically guiding expectations, even with Powell still in the big office. Waller is what we call a dove. He loves cutting interest rates, but he's also practical. He says temporary price bumps are okay if it means protecting jobs and economic growth. If the job market starts to wobble, he'd likely push for rate cuts fast. For your money, that means lower short-term interest rates and a weaker dollar. And guess what? Stocks and crypto love that combo. A Waller-led Fed would be great news for crypto, but he's not a pure rate-cutting machine. He supported Powell when they held off on cuts earlier this year, showing he can be patient. This mix of patience and action makes him credible, but critics argue that just the idea of Trump picking him might already be influencing his decisions, raising questions about the Fed's independence. He may already be driving the bus. Now, let's flip the coin. Meet Kevin Worsh. This guy has been in the Fed chair discussion forever. He used to be a banker and was on the Fed board from 2006 to 2011. Here's his deal. He's a huge critic of the Fed, saying it's gone too far, basically covering up bad government spending with easy money. Worsh is a hawk. He hates inflation and wants higher interest rates. His philosophy is simple: no rate cuts until inflation is firmly under control, even if that means slower economic growth. Unlike Waller, when Worsh talks, traders don't freak out as much. Maybe it's because he's not currently a sitting Fed official, but his tough guy talk signals higher interest rates, a stronger dollar, and less cash flowing around. That's generally bad news for stocks and crypto. Worsh's views actually align with Trump's past frustration that the Fed waited too long to fight inflation. But here's the kicker. His hawkish stance completely clashes with Trump's current push for rate cuts. If Worsh became Fed boss, expect an immediate market shock, a much stronger dollar, growth stocks crashing, and everyone running away from risky investments. For crypto, this would mean higher interest rates well into 2026, more expensive borrowing, less risk-taking, and Bitcoin having a harder time competing as digital gold. Doesn't sound great for the bulls, right? But some say he's on the list just to keep bond traders honest, reminding them that lower rates aren't guaranteed. Next up is Scott Bessant, the U.S. Treasury Secretary. This guy is already in charge of a huge part of the global money system. Wall Street has him high on the list, and for good reason. Bessant expects rate cuts by September, and coming from the Treasury Secretary, that sounds less like a guess and more like marching orders for the Fed. He also warned that if the Fed waits too long, they might have to make a huge move later. Bessant sees it this way. When short-term government bond rates are higher than long-term ones, it means the Fed is too slow. The 2-year government bond rate is sending a clear signal to the Fed right now: cut rates. To stop long-term interest rates from climbing, Bessant plans to hold off on issuing more long-term bonds. Instead, he'll sell short-term bonds, which are cheaper for taxpayers, and keep long-term rates down. Analysts are calling this the Treasury's secret weapon. He can lower interest rates just like the Fed. On top of that, Bessant is pushing for changes to bank rules that could knock off another 0.1 to 0.5 percentage points from long-term interest rates. All of Bessant's moves boil down to one word: liquidity, meaning more cash flowing around, cheaper borrowing, and freeing up banks to lend more. This is a risk-on cocktail that historically sends stocks and crypto flying. Critics say he just wants lower rates to make the government's debt cheaper, but he says the market is speaking for itself. A liquidity-friendly Treasury chief becoming a liquidity-friendly Fed chair could supercharge everything from bonds to digital pictures. His words already move markets. If Trump hands him the Fed chair, those nudges could turn into a full-blown policy drive. For crypto holders, that could feel like the starting gun for a huge rally. And then we have Kevin Hasset, director of the National Economic Council. This guy is a big believer in boosting the economy by making things cheaper to produce. He recently told a major news channel there's no reason at all for the Fed to not cut rates right now. That statement lit up his odds, making him another pure dove option that Trump is likely considering. Hasset's playbook is all about big government spending plans combined with easy money. He boasts that Trump's one big, beautiful bill will unleash major economic growth, and he sees rate cuts as the fuel that keeps that engine running. If he gets the job, expect a weaker dollar, a sudden increase in long-term interest rates compared to short-term once the Fed cuts, and a market-wide rally for stocks and crypto. A Fed that cares more about growth than perfect price stability is the starting gun for a continued bull run for stocks and Bitcoin. But betting markets aren't crowning him yet, as institutional traders worry about his lack of Fed experience and how it would look to put a White House insider straight into the Fed's most powerful seat. Beyond these four, there are wild cards, long shots who could surprise everyone in Trump world. People like David Malpass, a former World Bank president, who says the Fed is way too slow to cut rates and is stuck in old thinking. Or Michelle Bowman, a current Fed official who recently hinted she could support a July rate cut if inflation stays low, distancing herself from Powell's wait-and-see approach. Her presence, even with tiny odds, makes it seem normal that more current Fed officials want lower rates, putting more pressure on Powell. So, we've walked through the top contenders. Chris Waller, the insider dove whose words already move interest rates. Kevin Worsh, the inflation hawk who clashes with Trump's current goals but could shake up everything if picked. Scott Bessant, the Treasury chief eager to boost liquidity and make interest rates drop. Kevin Hasset, the growth champion ready to combine big government spending with easy money. Any of these four could be unveiled very soon, potentially undermining Powell even before his term ends. While it seems Trump is more likely to go with one of the dovish names, nothing is ever certain. The only certainty, the announcement itself, or even just the decision to keep everyone guessing, will cause huge swings in the market. And here's that crucial piece of information I promised. Believe it or not, because Waller is a current Fed official and his words already move markets shifts, many analysts are saying he's effectively already driving the bus. He is, in essence, the shadow Fed chair everyone is talking about, and markets are already pricing in what he wants to do. So, if Trump makes it official, the market will just accelerate a trend it's already started. Waller is a name you need to keep on your radar because he may already be pulling the strings behind the scenes. Who do you think will be named the next Fed chair? Let us know in the comments. If you enjoyed this, make sure to punch those like and subscribe buttons and smash that notification bell so you don't miss our next video. Thanks for watching, and I'll see you again soon.